but there's always going to be a leader, or a couple of leaders. And this is a battle for the future of money. And we're talking about, easily $200 trillion up for grabs there, but it's going to be $400 trillion in 10 years. And whoever actually creates digital money is going to grab 10, 20% of it for sure. You won't convince everybody. There's going to be a world of people who are going to think, well, I just don't trust that. That's too good to be true. But, roll the clock back when people talked about Bitcoin, they're like, yeah, well, it won't work. Oh, well, if it works, it's too good to be true and the government will take away from you.
I mean, eventually the horse-drawn carriage pilot still buys a car one day.
But imagine a world where 10% of that money flows into digital funds and digital banks and digital bank accounts. And that's a profoundly disruptive world. And we will create the Switzerland of the 21st century. It'll be the world banking capital. And I'm hopeful it's in the U.S. I think, I don't know why it wouldn't be in the U.S., but if it's not in the U.S., I wouldn't be surprised if it doesn't pop up in the Middle East, because if you appreciate technology and you understand digital assets and you appreciate banking and you like money, the most profound idea I have for you, it's, why don't you just attract all of the capital in the world into your bank, into your state? Because Lord knows right now, the traditional 20th century banking establishment has a proposal, which is give us your money and we'll give you nothing.
Yeah.
We're going to offer you return-free risk for all of your assets. You're taking duration and credit risk that does not offset, with yield that does not offset the duration risk and the credit risk. So pretty much you have hundreds of trillions of dollars, which is returning, inflation adjusted nothing.
Yeah. Well, below real inflation. I want to ask you a question, Michael. You said that your strategy is monomaniacally focused on this digital credit creation. Is that a reason why you wouldn't maybe use some of your Bitcoin to buy a Bitcoin business that could generate more Bitcoin? Is it not pristine enough to be the credit issuer if you also have other operating businesses inside strategy?
Put simply, we expect Bitcoin to appreciate 30% a year for the next 20 years. That is our risk-free rate. Like, that is literally the hurdle rate. I can acquire Bitcoin at 1x revenue. It's a monopoly on digital capital. I can acquire the world's reserve capital network at 1x revenue, growing 30% a year for the next 20 years, risk-free, integration-free, overnight, no questions asked. What could be better than that, right? Nothing could be better than that for us, right? Once you've actually established, yourself on the Bitcoin standard, and once you've rotated your shareholder base, right? The important point is not that everybody agrees with me. The important point is that all my equity investors agree with me. Mm-hmm. You see, our company exists to acquire Bitcoin. So if you bought me another option, you said, well, Mike, I've got this great startup and it's going to grow 40% a year for the next 20 years and emerge as a monopoly in the world. And I'm like, okay, that's great, Alex, but it doesn't sound as good as the deal I already have going. Like, what are the odds that you just found the next monopoly on money in the world growing 40% a year for the next 20 years? And by the way, let's say that you're a genius and you found it. What are the odds I can convince all my equity shareholders that it's better than Bitcoin?
Unlikely.
Yeah. And why would you, and by the way, why would you want to? Right? I mean, if you already have a risk-free rate of 30%, if you can buy it at 1x revenue, and if you can integrate it overnight, why would you do anything else? So I think, for example, let's say there's 100 companies out there that are trading at a discount to NAV.
Yeah.
Okay, well, the world's full of private equity funds that have a mandate to invest in 20 non-correlated investments, and their hurdle rate is 10 or 15%. And they're actually suited up to deal with all the social issues and the headaches, right? They sit on boards, they hire and fire entrepreneurs, they integrate people, they lay off people, they fight with lawsuits, right? So it makes perfect sense for a private equity fund or a public company with a roll-up strategy to buy a bunch of businesses. If you believe in diversification, right? We don't, right?
Right.
We don't believe in,
You said, what was that great quote you had? What do you have, one screen? You only have one screen? You have one chair?
I got one chair.
You're sitting on one chair right now.
I got one
You don't
chair.
have two chairs.
I don't believe in diversifying the fuel source that flows into your jet engine.
Yeah.
I believe in kerosene.
Yep.
I don't believe in diversifying the metals that make up the airplane wing. I believe in aluminum. I don't believe in diversifying, the composition of your semiconductor chip,
Right.
It's like you ever seen an NVIDIA data center? How diversified is the chipset in the NVIDIA data center?
Yeah.
Right? And I actually believe that when you find the solution, then you pursue it. But my point really is the world's full of people that have large pools of capital and their mission is to make diversified investments and their hurdle rate is 10%. And if they actually clocked 12% a year after lots of effort, they would declare victory and their limited partners would say that was a great year, right?
Yeah.
But here for us, that's not us. And here's the problem. My hurdle rate's 30% integration-free, risk-free. I've done the same deal 90 times in a row.
Mm-hmm.
And the product of the company is digital credit. What we're offering is STRC. We're offering you a product that's going to pay you a 10% dividend yield with a very tax-efficient return of capital dividend, right? And so if I'm offering you something that pays you 10% dividends in a credit universe that offers you 4%, give me one reason why you wouldn't buy that. Why is it that the entire world wouldn't sell their $100 trillion of garbage credit that yields you 1/3 of what we're offering after tax? Why wouldn't you just sell it all and buy Stretch? Give me the one reason. Right?
I'm not going to come up with one on the spot, I don't think.
Okay. Well, so I'm going to give you two reasons.
Okay, let's hear them.
You haven't heard of it. You don't understand it.
Yep.
And the second reason is you think that the issuer has a credit risk. So
yeah,
when we're going off, you bring me 10 good deals and I buy 10 companies and I get distracted by that. I'm so distracted by that. I'm on CNBC talking about all those other things. I'm not talking about Stretch, STRC. And then you're a credit investor and, when the message is, yeah, I have like $5 of capital for every dollar of this instrument. It's like, I get it. But then you're like, but tell me about this other thing you just did. And I heard they're getting sued or
I see it.
That's going to take a year.
It distracts you. It creates credit risk for you.
You're creating opacity and you're creating a dilutive distraction. You actually get a diversification discount. Like the person buying this instrument simply wants to hear you have the money to back the instrument. Right. And
it's almost like a collateral mix that gets more complicated. They want the digital capital under there. They don't want this business doing this weird thing and that other business that may or may not do well this quarter. If
I just spent 5 years, every day of my life for 5 years to explain and convince you that Bitcoin is digital capital and I have a lot of it.
Yeah.
You think I want to show up in the 6th year and explain that I also started buying these other 16 undervalued companies and we're really good at doing takeovers and integrating them and it's...
Yeah, that would seem strange for you to do. I get that.
Again, it's a distraction for us. We've got, in my opinion, we have the world's greatest product.
Yeah, but what about buying other like distressed Bitcoin treasury companies that are trading below
Again,
NAV?
The point is it's a distraction.
Yeah, just the process of doing it.
How long do you think it takes to close the deal?
Yeah.
A year?
Yeah.
It takes a year to close the deal. Do you know all of the liabilities that are embedded in the balance sheet? No.
Right.
When do you find that out? In 6 months?
Yeah, some point
9
during
months?
the process, I guess. Yeah.
The point is, why would I buy Bitcoin with all of the whole message for 5 years is Bitcoin doesn't have employees. It doesn't have management teams. It doesn't have counterparty risk. It doesn't have supply chains. It doesn't have leases to break. It doesn't have Nexus. It doesn't have all of the 30 pages of liabilities
Yeah.
that companies have. So why would I want to go and buy 30 pages of liabilities?
It'd be like Bitcoin wrapped in a giant cluster.
Yeah, and here's the point, right? I can build a digital building in one day with no risk. Why, you're like, okay, well, I can do this in one day at 1 times revenue. You've done it 90 times in a row. And then some dude comes along and says, well, I have a building that's similar that'll take a year to close the deal. And I think it's like a 20% discount, but I'm going to need you to sign up to unlimited liability for the next year.
Right.